Welcome to the Anchor Your Retirement podcast. I'm your host, Barbara Gullen, hanging out with my buddy and pal, Tony Shore, with his famous record t shirt on for
Oh,
those
yeah.
of you on video.
Yep. The
Oh, and
the
it's a bright,
Voyager.
sunny. Now, is it a bright, sunny day up by you?
It is. It's actually beautiful. We're gonna
Yeah.
get into the high 40s. Maybe, parts of Minnesota will be in the 50s today, so
Yeah. We're going to scratch the mid 70s today.
wow, that's huge. But
Yes.
tomorrow, our temperature is gonna drop another 20 degrees. We'll be in
Oh,
the
and
low 20s.
by Sunday, we will have sleet, ice, and snow.
Yep,
So I
same.
will be savoring this weather
Yeah,
today. But most important thing, spring training is in full swing.
it is. Yep. Baseball season is upon us. We're
It
already
is.
talking about spring training, and there's still snow on the ground, so
And, Jack Caglione with the Royals hit his first home run of preseason last couple days ago and clocked it at some astronomical distance. It
really?
it came off the bat at 115 miles an hour.
Oh, man.
Yeah.
That's awesome.
Yes. So,
That's great.
and
Yeah,
I think
wow.
do we open against the Twins this year? I'll have to look. Anyway,
Uh-oh.
I have great expectations for my Royals this year.
Oh, do you?
I do.
Oh, that's weird. I don't have great expectations for my Twins, but that's a great tie-in. That happens to be what you wanted to call
The
the show
type
today, Barb.
Yes.
Great expectations. And of
Yes.
course, you say, I go, what are we calling the show today, Barb? What are we talking about? And you said great expectations. And I immediately, of course, thought of the literary classic. When you hear great expectations, you think of Dickens and his
Yes.
novel, one of his most successful, complete novels, Great
Mhm.
Expectations. And I'm thinking immediately, I think, okay, if we're going to have an analogy to the book, what character would I be? And I looked at the list of characters to refresh my memory, went online, and I'm like, oh, yeah. I guess I'm now the little orphan. Just a little orphan boy, Barb, named Pip.
You're gonna tell the story. I'm just gonna play Dickens and write it for you, okay?
Yes, exactly, exactly. But really, we're not talking about the Dickens novel, Great
No, we're
Expectations,
not.
Although it's a great story.
It is. I
Um,
highly recommend reading it if you
oh,
haven't.
yeah, it's a classic, and, it's, like David Copperfield, Great Expectations. These are a couple of his greats, both fantastic. However, we're talking about realistic financial expectations,
Right.
the markets. What's been
Mhm.
going on there, Barb?
Well, if we look back at the history of the S&P 500, 74% of the time, or about three-quarters of the time, just a smidge under that, the market is positive and does well. But there's that other pesky 26% where the market is flat or we have a pullback or some sort of correction. And I dare say that many investors sitting out there have fantastic memories of 2023, 2024, and 2025 where we have had double-digit returns in the S&P 500. The roaring 20s of the 21st century.
Ah, I like that. The roaring 20s of the 21st century. I'll tell you what, the last 3 years, I mean, the S&P has been on fire. We've
Mhm.
had record highs in the markets, both in the Dow and the S&P. But you told me a funny story that kind of shocked me before the show. We were just chatting. I said, "What's been going on?" And somehow it came up. You said, "Well, I heard
This is
somebody
another advisor, yes.
yes, I heard somebody complaining that the core select portfolio at Gradient Investments, they complained because it only did 12% last year. It was
Right.
up 12%. And I'm like, I laughed because I'm like, wait, I want to be in a portfolio that's up 12%.
Wouldn't we all give
Yeah.
anything to be
And they're
of
like, but
that
the S&P was
consistently?
up 19. It's like, but that's not you're never going to match. It's weighted. That works
Mhm.
different. People always look at that though and say, okay, I want to be I want to be in a portfolio that does exactly what the S&P does. It's
Then
not that
get it an
realistic.
S&P index fund.
Yes. Yep.
But anyway, I'm not giving advice. I am an advisor. I'm probably not your advisor, but I'd
You're
love
not giving
to be your
personal
advisor.
advice, but
I'm
we're
not giving
looking at the
personal
big
advice, but we're
picture.
looking at the 30,000 foot view here.
Yeah.
And the thing is that we are all very short-sighted and forget that 2022, the
Yeah.
S&P was down double digits, almost 20%,
Yep.
if my memory is correct.
You're correct.
And it is,
And the problem there is bonds were also down, and so was the
right.
Dow.
So
Everything
it was a
was
dumpster
down.
fire.
Yeah, it was a
a dumpster
down
fire.
year. And
And
those happen.
like I
Down
said,
years happen.
well, gee, 1 year out of the last 4 was a down year. Almost like we know that that's kind of on average how it happens.
Right, that is the average, isn't it? Yeah.
It is. And as an investor, somebody who isn't licensed, somebody who doesn't do this all day, every day,
Right.
I don't want you going into this year or going into any kind of investment strategy thinking that that the growth chart is always going to be pointing up and toward the right.
Yep.
Crypto is about half of what it was at its peak. I mean, Bitcoin was in the 60s earlier this week. I don't know where it is today. I haven't looked yet. So if you are putting all of your eggs in any one collective basket, whether that is NVIDIA or a specific stock, this is why we talk about single security risk with things.
Right.
You have to understand that if your portfolio isn't diversified, then you are going to be setting yourself up for disappointment at some point.
Right. And you have to look at it if you keep getting closer and closer. Barb, I just thought of an analogy.
Yep.
I don't know for our listeners out there that ever saw the movie Ferris Bueller's Day Off when they went to the Chicago Museum of Art.
Oh,
History.
I love
And he's
that
standing in front of,
season.
I think it's a Monet, but he's standing in front of the painting. Cameron is, and he's just zoning out. Like he's
And they just keep panning in closer and closer and
they
closer.
keep getting closer and closer and closer. So it goes from a sharp picture, right, which should be your investments. It's spread out. You see the whole thing. And his focus, he just kept focusing in then on the smaller part and the smaller part. But what happens is you focus in. It gets fuzzier and fuzzier until you're just seeing one dot. You can take that theory, like, why can't I just want to do what the S&P does. Well, you can take that down. What's holding up the S&P? The Magnificent Seven. You could just invest in those 7 stocks because they do better than the overall S&P.
You could.
Or, hey, wait, of those 7, who does the best? Well, over the past 5 years, NVIDIA has done the best. Right. Why am I not just in NVIDIA? Because if you look at what NVIDIA has done, there are times when you would be way, way, way down. And if you're pulling money out for retirement, I think the people try to focus in too much. They're not being diverse.
Right. I just peaked. Bitcoin, I just looked at a chart. I shouldn't say. Sure. Bitcoin peaked at about $125,000 in October of 2025. So not even 6 months ago.
Yeah.
And we're trading at 65,000 today.
That's a huge drop.
Yes.
I mean, you talk about being able to handle volatility.
Yeah. I mean, this is why I strongly recommend people work with an advisor, a fiduciary advisor who has access to market-based products as well as insurance-based products, so that you can develop a well-rounded portfolio that's going to have a little bit of a seawall to buffer against some of the choppiness and the crazy. This is a midterm election year. I've lost count of how many times I have said on this podcast already that this is going to be a volatile year. It is going to seesaw. I think I agree with the experts that overall we are going to trend up, but it is going to be a much smaller upward trend than we have seen the last 3 years.
Right.
The best
Yeah.
way to get through this is to not do it alone.
Right. And don't put all your eggs in one basket.
No, no. You
Yep.
know, it's just not, it's not a good strategy.
Right. And so the purpose of the show today and what we're talking about is setting realistic expectations
Right.
and making sure you're working with an advisor who, if you're upset by a 12% return, there's something wrong. Your expectations must not be correct, or you're
Mm,
not allocated properly, because that should not be a problem in your
no,
financial picture.
no.
Now, if the market's down 20% and you're concerned about that, that's normal. Being concerned is normal, but volatility is normal. We're going to have corrections. The
We
market's
are.
going to There's going to be another day between here and the end of your retirement where the market is between now when you retire, or when you've retired and the end of retirement. There's going to be another time when the market's probably going to drop 20 to 40%. I mean, we're going to have
Yes,
corrections, and
we are.
NVIDIA is going to go up and down as AI kind of settles in. I think we're early innings with
And as
AI,
more
but
competitors come to the market,
it spreads
and
out, right?
I hate
It's
to break it
spreading
to
out.
you, but somebody is going to be the next NVIDIA.
Right.
And we don't know who
Exactly.
that is.
Right. And there are a lot of smaller companies who are innovating, who
Mhm.
you think, well, they'll just get bought out. Maybe, or three of them might go in together and become the biggest overnight. It
They
happens
might.
all the time. So, but the experts say they see it kind of leveling out. A lot of small and mid cap
Mhm.
companies starting to do really well off of what's happening with AI and technology and other things. So I think that's good to look at. But
Me
everything
too.
can affect it. I mean, you can have a bad markets one day because somebody sneezed in China. I always say that if somebody sneezes in China, the markets drop, but it's usually a temporary thing. And the next day they climb to record highs. This happens, right?
It is. I mean, we saw, today is another day where the S&P is down. We've had a couple of those days this week. We've also had days where the S&P went up. And if you are looking at it day to day, you are going to give yourself a migraine.
Yep.
I am not saying don't keep an eye on your portfolio. I am saying don't micromanage your portfolio unless you're the one doing the investing. And even then, I don't think it's healthy to do that.
Yeah, yeah. I suppose it's not, but the bottom line is you don't need to worry about a 12% return or a negative 12% return or anything in between if you have a written plan in place and are
Right.
working with a trusted financial services professional.
And if
And it
we
really scares me that a so-called professional was worried about what they're going to tell their client because one portfolio their money was in only return 12%. That scares me a bit.
It does, because we need to look at the overall big picture. When the when we're looking at this and when we are planning out long-term strategies, when we are putting together a plan for a client, we are planning on a 5 to 6% return because we know there are going to be those pullback years.
Yeah. Yep, there are.
I can't build a Pollyanna-ish strategy for a client saying that we're going to get 10 to 12% a year and you're going to be fine when that's just not practical.
Hmm. Yeah. Yeah, and certain portfolios do well one year, and maybe the next year they don't do as well. But I think
Right.
most of the portfolios, especially the ones I know you have your clients in across the board, most of them have been doing really well. And I mean, the markets have been doing really well. So,
They
um,
happen. And even in 2022, when we
mhm,
had that big pullback,
yep.
the portfolios that we work with didn't see as big of a dip because they're actively managed.
Yeah, that's true. They are very, I saw that firsthand. I mean, um, I actually was in the know and kind of in the middle of a discussion between the president of Grading Investments and their senior portfolio manager, and they were talking about the price of silver. And a few weeks
Mhm.
ago, it hit a crazy level that silver
It's
hasn't
still at
hit.
a crazy level.
Right, but they downsized their they had a portfolio that was pretty heavy
Mhm.
into silver, and they downsized it, and the next day it dropped way more than that, and they saved a lot of money, a lot of people a lot of money. And precious metals will go up and down. Gold is they're riding high right now,
Yes.
but they're trying to keep people from selling everything and going into just gold because
This
uh,
has been the first time in history that precious metals have kept pace with or outpaced returns in the market
right, for 10
for a
years,
prolonged period
gold
of
just
time.
went down. I mean, there
Yeah,
was a 10-year period where gold didn't have any gains. I mean, are you gonna sit for 10 years where something's not making any money or losing money every year?
right.
It's just not realistic, and, you gotta be careful, with
And
risk.
that's just it. You need to have pragmatic, realistic expectations. And you need to, when you are planning, and if you're trying to do this yourself and you don't have a license, I highly discourage you from that.
Yeah.
You have got to plan on a much more realistic, if not pessimistic, rate of return on that investment so that you are making sure that you are not going to run out of money or so that you've got the cash flow to do what you want to do.
Yeah, exactly. And that's right. And there are so many different aspects to that that you've covered on other shows, like make sure you've saved for an emergency fund and have enough liquidity, make sure you have enough principal protected, make sure you have enough in growth. What is your own personal risk tolerance? What's your
Right.
goals? Time horizon. You've talked about
Right.
all these. They all play a factor, don't they?
Well, they do. They do. You know, the darling of the market today is not going to be the darling of the market 20 years from now.
Right, right. Nvidia might not be the darling of the market 20 years from now, or it might have a period in there where it's down for 5 years in a
Well, do
row.
you
You don't
remember
know
when
that.
Pfizer was the darling of the market because they came out with this blood pressure medication
Yep.
that had this side effect that everybody, well, half of the population, especially over 50, appreciates?
Wow. Crazy.
Pfizer was, middle of
I
the
do I
pack
vaguely remember
until
that.
Viagra hit the market, and when it did, and the only reason I remember this is my brother-in-law was working for Pfizer at the time.
Ah, yeah, I don't
Okay.
remember. I know there were periods where, like, the big companies were, I remember
Mhm,
Monsanto, then Pfizer. You had these
mhm.
companies that grew to ginormous proportions, right?
Right, right.
And now we have Nvidia, and so we'll see what happens. And I
And
think
Lilly to an extent with all of the GLP-1
Lily,
market that
yeah,
has been cultivated over the last couple of years.
yeah,
You know, uh, and all of that to say that we don't know what the next big thing is going to be. And if your eggs are in the basket for today's big thing, you've already shortchanged yourself.
yes,
I
yep,
mean,
yeah,
there's just when you are going into putting together a financial plan and when you are working with an advisor, a good advisor is going to give you realistic expectations.
yep. There you go. And like you said earlier, and I just looked it up so I could quote the source.
Mhm,
But independent investors,
mhm,
the majority of the time, buy high and sell low.
right?
And according to a Dalbar quantitative analysis of investor behavior, which is
That's a mouthful.
a well-respected, the Dalbar.
Yes,
I
yes.
mean, that's kind of the unbiased
Gold
and
standard.
gold
No
standard,
pun
and
intended.
they analyze investments, behavior, and markets. Yeah, I mean, they underperformed the market typically by half,
Mhm.
and or actually ended up with less than half of the wealth they would have accumulated working with an advisor who has their accounts in actively managed funds. or if they just, like you said, put it in an S&P index. So, but you have to look at your overall picture, and you have to look at a longer period of time. Most independent advisors don't keep anything in one stock for more than 4 years, it says.
No, and you need to
That's not
make
long enough.
no, and you need to make plans for the contingencies. Nobody wants to think about getting sick, but a lot of us end up doing that.
Yeah. Yeah, and you have to avoid costly mistakes, which are easy to make, and you've been through it all over and over again with so many people helping them,
A few
that's what
times.
you're there for, to keep people from making those costly mistakes, right?
Yes. Yes. And I mean, and I have clients that call and ask questions too. Um,
Yep.
because life happens and the
Sure.
world is moving faster and faster and we are getting bombarded with information.
Yeah.
There's never anything wrong with asking your advisor a question. And if you feel like you can't ask your advisor a question, then you need to find a new advisor.
Yeah, get a second opinion, find a new advisor, because you should be asking questions, and there are no
Right.
dumb questions. It's
No.
really important. And I know you love hearing from our listeners and viewers. So before we go, Barb, make sure you let our listeners out there know you
Yeah.
and your team there at BG Wealth, you offer a no charge, no obligation consultation, correct?
Completely complimentary. Yes.
Yep.
With either myself or another one of the fiduciaries here in our office.
All
They
right.
can do that by going to our website, bgwealthmanagement.com, or calling us at area code 913-553-6222.
All right. Well, Barb, great show today. I love it. Great expectations. I do have great expectations, not necessarily for the markets, but for the show and for our next episode, which I
We'll
can't
have
wait.
fun.
We will have fun. And you make a great Dickens. I'll tell you that.
Well, thank you very much.
Yeah. Yeah. A great storyteller and a lot of great information packed into today's show. But manage those expectations. Make sure you don't let your emotions dictate your market
Right.
investments. So, and don't let the 24-hour news cycle get you, like you said.
No, no.
We're bombarded with it. So I'll
Go
read that.
turn off the TV, get a little sunshine, touch a little grass, please.
Yes, do that today. And call Barb. Ask those questions, 913-553-6222. Again, call BG Wealth Advisory at 913-553-6222. And that does it for today's episode of Anchor Your Retirement with our host, Barb Goen.
We'll see you soon.